Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Overnight, the Australian dollar mirrored the demand as to the spot gold. Being a commodity-based currency, is that the Australian dollar surged from the lows of 74.50 and rallied through 75 cents and now looks towards the region of 75.50 as minor, or even up towards 76 cents, which is what I've been calling now for the last couple of days. The reason behind that is there has been bullish divergence from the RSI as well as the stochastic and also from the histogram. Since posting an 11-month low of around 74.12, the fact is that we've now established a short-term base from 73.75. So with the divergence kicking in, should eventually see a further rise to the Australian dollar. Also overnight, the US dollar was slightly weaker, and my concerns was the fact that it was showing some cracks in the support, and also to the fact that the euro had reached its objective of 118. In light of the measured move from 121.80 to 118, gave me a neutral outlook and squared my positions up. And also concerning was the fact we were oversold. What started the move was overnight that the softer than expected US inflation figures have now put a slight step on the US dollar, which could see a pullback from the highs of from yesterday's recorded high of 93.25 and look down towards the region of 91.45.50. This in turn will see the euro rally on towards the region of 120.40 to 45 area. At present, the resistance is seen at 119.55.65 with support of 118.70. But from the break of the downtrend, and also some of these indicators are strengthening up slightly, should see a further gain to the euro. Dollar yen has failed once again towards that 109.70 level, and now backing away could see a further fall into the today's session with the target now 108.70.80. I have been saying all along that a failed attempt would see a pullback and would give us opportunity to buy on the dip, and this is what we're seeing now. So look out towards that region of 108.70 as we should see a return in demand. Overnight, the Bank of England kept interest rates on hold and said weak growth during the snowy start to 2018 was likely to be only temporary, but it wanted to see a pickup in the next few months before raising any type of move. From a technical point, the indicators are rising, and with a few dojis in here and also some uncertainty to the downside, I'm now viewing that the pound may actually start staging a further rise, with the immediate target seen at 136.05.15 and up towards 136.65, with support still hanging from the region of 134.60.80. The gold overnight surged to a significant rally of $12, and as the US dollar tumbles, the market now looks further towards 1,330 as to the next challenge, easing the tension from the downside. And as all along I've been looking for a buy from that region of 1,300, it has come through, and now $20 higher looks towards the next target to the upside, with the technicals also strengthening, should give more convincing move, with the safe haven currency slightly on more demand. And the reason behind that is the fact that there was reports that Iran and Israel exchanged missiles in Syria overnight. So some conflict coming out there has put a bit of safe haven demand back into gold. Wrapping up with oil, well, the market at this stage is still contained by the 72 resistance, but I'm not overly sure if we can break that. I'm not bullish at these levels, and I do expect to see from the doji that we could see a pullback. Immediate target is around the 69.5, but we could even fall back towards the 66 region, which was reasonably well supported at the time when it was being challenged. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the rest of the day and a great start to the new weekend.